it is an absolute no fucking brainer for anybody in property development. You cannot afford to not be part of it. And that is just not even trying to forget about sales tactics, and we're just being genuine.
Roundup sound. Ooh, yeah. Real estate deals. We lay them down. Let's get those deals. Deals. Deals making money, baby.
Sorry, Stu. What's going on here? Go on.
I just pulled them out. Now they're too big, basically, mate. They're supposed to be little signs in HMO above electricity cupboards. You know, you sometimes order and they get them a little bit. Get the sizes incorrect.
I bet it probably does have the right dimensions on the order, Stu. You've just looked at it on your computer and thought, yeah, that looks about right size, but you forgot it's on your screen.
You know, they do different logos and styles. I looked at it and gone, yeah, that looks fine. We'll order 50 of them.
You did the opposite and ordered your jumper in it too small.
You got 50 of them.
Yeah, great. At £5 a pop. Can't wait to put them up.
Well, at least people won't have an excuse that they can't see it.
Exactly. At least I'm not going to prison for electrical hazard. It's clear as day there's a problem there. Anyway, happy Christmas, boys. I know it's a week after we got the dates wrong, but cheers.
Merry bloody Christmas. And right, everyone listening at home, Merry Christmas, Happy New Year. We are, at the time of recording this, we are pre-Christmas. We are the 19th of December, and we've got a 2-week in hand with our recordings. So that's why it's not going to be Christmas by the time you listen to this. It's actually going to be the new year, I think. So happy
2025
New Year.
by the time you're listening.
Well done. If you made it to 2025, what was it? Survive till 25? That was the mantra.
Survive till 25.
That's right.
So if you made it
tough old year, wasn't it?
Bloody tough old year.
Since we've seen that inflation's gone up, it might be survive till 26 now.
Yeah, fucking hell. Well, we'll get to inflation and all the boring shit of our market and our banks and all that fun stuff. But first things first, welcome back. 2025, episode 36. Big love, everyone tuning in. And today we've got an announcement. We've got an announcement and we're going to run through some other bits. So announcement will come first and we'll run through that. And then we're going to talk about problems we've had in business and property where we've nearly died, like not physically, obviously, but where the business has nearly gone under or a project's nearly gone under, but we've managed to save it and turn it back around. The decisions we made and things like that, because I know we've all got these scenarios. It's probably helpful for people to understand how we got out of them. And then we've got a few audience questions as well. So we'll run through everything, talk a bit about inflation because that has just been printed upwards at the time of recording. But anyway, big love. Mm-hmm. Let's get into it. So should we start with the announcement, guys? Our little...
Let's do it.
Which, to be fair, everyone listening will have actually seen this by now because it would have been on our socials. So, and we just didn't preemptively think of the recording timelines in line with when we'd release it. So by this
standard ground up.
Standard ground up, baby. Lastminute.com. But we are... we have launched what's called the Ground Up Network, which we've been working on for a solid few months, trying to conceptualize this idea where we can create a space that is useful for people to actually get support when they're in their development projects, when they're starting out, rather than paying 12, 15, 20 grand to some course sellers. Instead, you can pay a nominal cost monthly and opt in to be a part of a network where there's valuable resources that you can pull from, as well as engagement with weekly Q&As and things like that. We feel like there's a gap in the market for it, for a proper, for real developers to actually set up this kind of ecosystem in the UK, where it's not a crazy high cost or barrier to entry. So that was a plan. Guys, I don't know if you've got anything to say on it before I bring it up on screen and start going through it. Let me know.
I mean, we all speak to people individually, and we just thought, you know what, we were agreed before. We're all practicing developers. We're all different parts of the country. We love spending time together. We love our listeners getting involved and asking questions. And we thought, what a great way to get a platform together. We can be active on there, 2, 3, 4 times a month. We can hold live events. We can meet up with you guys as well. So yeah, if you're interested, definitely join. We're doing a 3-month trial or free period of time, aren't we, Rye? And then
7-day free trial. Yeah, so it's
7-day free trial. Yeah, and there's loads of content on there. There's stuff we've taken. We've got a massive Q&A section, which we're constantly building on. So when we're cutting up all these segments into bite-sized chunks, so if someone has got an issue in a certain topic, they can go through and hopefully watch many minutes and many hours of our opinions on the problem. And if we've had that problem before, how we solved it. So yeah, definitely have a look on it, sign up, and hopefully look forward to seeing you at a live event, which will be coming up in 2025. Rye?
Yeah, beauty. What do you guys
Yeah,
think
I
as well?
think just to dive in now, I think like the goal is to create the most seamless and frictionless environment for people running businesses or development companies to have, at hand the resources to get through the problems. Our businesses are problem solving, and problems will come at you thick and fast. And the bigger the deals that you do, the bigger the problems are from a monetary value. So creating a frictionless community where you can fire in questions. Obviously, the benefit is it's always live, so you don't have to wait to meet up with someone or wait till you've got a one-to-one with someone. It's just there, and it's also cutting up a lot of the content that we've already recorded into an easier finding place, so that when you have a problem that's driving, you can find that, but also learn around how we've scaled our businesses, and obviously using other people as test cases, and basically building we think the best community in property development in the UK.
And
Amen, sister.
I'll probably just be a little bit more aggressive about it. It is an absolute no fucking brainer for anybody in property development. You cannot afford to not be part of it, and that is just not even trying to forget about sales tactics, and we're just being genuine with the four of us and the cost of it and all the resources and the templates that we've put in, and the walkthroughs and the Q&As and the live responses and being able to answer questions that we probably all answer individually as well. It's all fragmented, but everything's in one place. It's just a no-brainer. We're all working on 6 figures and 7 figures and even 8-figure developments. Literally, we're talking the cost we're talking about is not even a rounding error in any of these deals. So it's just an absolute no-brainer. So it doesn't really need any selling. Just get it live, click the link, and join the community.
Amen. Well, yeah,
Sounds
let's just
good.
stop it there and carry on with the pod. But I completely agree. I think we wanted to make this low cost. We didn't want to be like going out there pumping 10 grand courses and shit like that, which we probably could do. We could set up a membership program for some stuff, and maybe we'll look at more advanced things in the future. But for now, we wanted to just go, look, we've got this podcast, we're sharing free knowledge. How can we create something where we can engage with people? Because yes, you can ask questions on the podcast, but that's not very helpful if you're on site and you're facing a bad contract, or you're facing a bad day and you need the answers now, you need some support. So that's what this network should provide. Pricing wise, we're starting at £100 a month for the first batch of members, and then it will stagger upwards over time. But once you've locked in your membership, it never changes. It stays at that price for the
Lifetime
foreseeable
cost.
future. Yeah, but it will stagger up as membership gets bigger. We've got a dedicated community manager set up to help manage the community network and make sure everything's getting answered. Because obviously we're busy throughout the working day, but people might need answers on things. And this way we've got someone sweeping up as well as doing the webinars and the Q&A. So we're putting resources behind this to actually make it something valuable for people off the back of the podcast, and hopefully the two work in synergy. So here's a little screen recording. So if you are if you are listening to this and you can't see the visual, then just come back later at some point and watch this part of the segment, just because we'll do a bit of a demo. Present L screen, share screen, entire screen. So yeah, let's just walk through some of the features, and then bear in mind as well, we really want feedback on this. So anyone who is in the Ground Up Network so far, please do give us feedback, because we want to improve it and make it better, and make it something really useful. So guys, can you see that?
Yep, good as gold.
Sweet.
Yeah, the Matrix.
The Matrix. So this is pre-launch. I won't go into crazy detail because there's a lot of videos that we've pre-recorded and put onto the network and the about page before you even buy it, where you can see in thorough detail. But for now, there's a community section. This community section is where the engagement can happen. There's some pinned videos here that you've got to watch before you start using the network, just because they set out some ground rules about no spamming, no being a bell end in this community or you get kicked out. And then also just how you use all the functionalities and things like that. But this is the place where if you've got an issue on site, or you've got a query, or you join the network, want to introduce yourself, want to do some networking internally, then you can just post in here, post whatever you want. You can add attachments, files, links, and all sorts. And I think that's
anything you like, yeah? Anything you like. So if you're looking for a quick price, you're looking for, you got to get a report done, anything that we work on all the time where we can just fire in answers and try and help people. That's the plan there, yeah?
Yeah, exactly. And the benefit of this is the more members we get, the more people engage in this community, the more of a wide range of specialists we'll have. So there could be engineers in here, brokers, joiners, builders, QS, like whoever. And obviously all these people can also contribute to helping people with problems as well as us. So that network effect should be what makes this really valuable. It will take time. We're not expecting to blow this up in the first week, but over time, over the course of 2025, we want to build up the membership so that it is very useful. But that's the community section. It is also categorized. So in the top, there's like these little tags. And over time, we're going to build up those tags just so that if there's been topics of conversation between members or between us over time, you can use that as a shortcut to find all conversation about HMOs, buy-to-lets, construction costs, or whatever it is. And then there's the classroom section. So there's sort of two parts to the classroom section. The first part is all of this indexed content at the top, where you've got the ground up members. So this is us guys introing our businesses, talking about our business models, what we do for work, as well as just some nuggets about how we built our business and how we've mentally gone through some of the hardships and things like that. Should be useful if you're looking to set up a business because you can preempt a lot of the stuff we've already faced. Then there's ongoing insights, and this is going to be ever evolving as well. It's just loads of different topics of conversations we've had with guest speakers, with us, but cut down, indexed into shorter bite-sized chunks so you can cut through the fat quicker. That will keep evolving. And then there's the Q&As. Once we've recorded the Q&As, we'll cut them down and index them into FAQs in this section, which basically means if you've then got an issue, you can search that first to see if it's already been spoken about and answered before. And the way you do that is in the top search bar, you can type in, let's say you're looking for, finding a contractor or something, then you can type that in the top and it will search through all of the content and it will index it for you. So through keyword searching, you can get to the answers quicker, digging through all the content.
That's brilliant.
That should be a useful feature for people because over time we build up more content, we streamline it, and then you've got more things you can go and search for. Then there's the modules. So module wise, you'll get access to this one straight away, which is property deal analyzers, where we've all gone through. So Dorian's taken on new builds, I've taken on HMOs, and Jack and Stu have both collectively taken on commercial to resis and buy to lets. And it's them going through with our appraisal documents, the Excel sheets we've spent years building, then showing in a live case study on how we would, value and appraise a new build site, a HMO site, or whatever it is. So you get that straight away. And then there's these other modules that will be locked for a period of time. And that's just going through developer fundamentals, raising money, legal agreements, all the stuff you need to know and that you will go through as a property developer, and us giving our 2 cents on it. And then there's some extra bits and add-ons down the bottom, namely our contracts and templates that we've spent many thousands of pounds over many years building. And yes, that comes at an upsell because frankly, it costs you a lot of money to set up these templates, but they will be there as well. And then there's a calendar section which will show all of the events that come up in the future. So when we're doing the webinars or when we're doing in-person events, you can see them here. You'll get emails and reminders for those sort of things. And that is pretty much the bulk of it in terms of what you get in there. And it's all about the engagement. The content that we've got in there is to help people and to gen up everyone's knowledge so everyone in the network can quickly kind of get to sort of similar foundational level and then be more useful for each other when we're actually engaging. That's it for now. What we saying, guys? What we saying, gang?
Brilliant. I mean, we'll
Where
be
do I
arranging site
sign?
visits through there. Yeah. So any site visits on live sites, I think we should book through here. I think we should definitely try and work with the community to meet up fairly regularly as well. I mean, one of us will be in there all the time. I'm guessing.
Well, I
To
think
keep an eye on the.
as you're all aware, listen to this. We're all hyper ambitious, motivated entrepreneurs and property people. So when I say that our goal is for this to be the number one network and space for property developers, we're all in agreement with that goal. So we will just naturally want to make it very, very good. Hence, coming back to my point, it's a no-brainer to be involved for that investment. One contact, one resource, one answer to a question on a deal you're doing. It's just your return on investment is just going to be extremely, extremely high. Everybody knows that. But more importantly, we're invested to make this the best. So get involved.
Equally, gutted this wasn't around 7-8 years ago.
Yeah, but that is the thing. If you're starting out, you don't start with a network. You don't have the contacts, the black book, and that's the benefit of the internet. It arbitrages all these things and makes life easier for people. But obviously, we've got to facilitate that kind of environment, and that's what we're trying to do. It'll take time. We appreciate it'll take time. There'll be kinks and things to sort out, but
Whenever I give advice to anyone new getting into property development, I always give them the first 2 points they should do. There's two things anyone should do when they get into property development. Number one is build their knowledge, and number two, build a network. That's really it. Don't worry about strategy. Don't worry about doing deals. You just rinse and repeat those two things constantly, and then opportunities will present themselves, etc. What this network, what we're doing, combines those two with our resources, our knowledge, and our network, and then the communities as well. So it's just, again, it's just
no brainer.
see you in the community. Just get in there. Just get going.
Get in there, mate. And also, if you sign up, guys, make sure you download the app, because there's going to be people out there going, well, why don't you just set up a WhatsApp community, things like that. But WhatsApp communities, and I've been in them and been in groups, and we've got our own group chats. There's 4 of us in our group chat, and some days that can get spammed to a point where you just can't go back and possibly read everything in detail. So you can't get that same value. Whereas if we have this community and you download the app is just as good as WhatsApp. You just open it up and you're straight in, and you can see everything going on. You can turn on the notifications, but it's indexed and everything's siloed within its conversation and its post. So it's much easier to search through and actually find problems. Whereas a group chat, you can put in a question, then there could be 50, 100 other messages in a group chat of this size. So it just wouldn't work. So this is the way for formatting wise, this is how it will work. So make sure you get the app. Other than that, that is the Ground Up Network. And it's our new project of 2025, build the podcast and build the network. So stay tuned, watch this space. But yeah, that's it for now. Unless anyone's got anything else to add, we'll move on.
See you all on there.
See you on there. Last night I went to our works Christmas do. I've got the loft fitters do tonight, and then the development crews Christmas party on Friday night. So I'm bollocks today. But ultimately, last night we spent a good half an hour last night just running through the last 12 years, 11 and a half, 12 years of business. And we spent about 45 minutes going through as many problems as everyone could remember, whether it was customer related, loft conversion related, trade related. And as we were talking, I was thinking, fucking hell, this has probably cost me at least 2 million quid over those years, just on mistakes and problems, which you just take for granted. And now you just make these decisions like almost self-consciously. You just know that is not the right path to go down. I'm just thinking on the community, I want to try and articulate as many of those problems as possible. And if people are bringing issues to the table, I'm going to try and document those either on video. We'll take them as problems from the podcast and we'll talk about them on here, or we'll do some live Q&As or questions back. But I think that's just so valuable. There's so many mistakes and so much money you can lose in property and in development, where if we can try and capture them, then they are going to be gold. And I think just by one mistake that saves you 30 grand is going to pay you 10-year membership. So let's start logging them all next year, baby.
Yeah, baby. Well, yeah, sweet. I mean, now we'll crack on with the episode. So the topic of today was to try and paint a sort of analogy for this. So, there's been situations and circumstances when you're building any business, particularly when you get to a certain scale, which I think we've all kind of got to that point now. By scale, I mean scale of staff, operations, just the time and energy that's to go into that kind of business and for it to sustain your lifestyle. There are always those fork in the road moments where you get pinched, especially the market we've gone through. You get pinched to a point and you've got to make a few high-level critical decisions. You make a wrong decision or go down a wrong path, and sometimes you can't come back, or it can cost you a lot more money. So it's about making those right decisions. And that's what we want to try and talk about, the moments we've had in properties specifically and in business where we've hit that juncture in the road and what we've had to do to get out of it. Because in property development, you're pretty much always going to hit these problems at some point. It's just the nature of the game. So hopefully useful convos we can have today. If any of you guys have got a scenario to start with, juicy details if we can, boys.
I'm happy to kick us off.
Go on, Jay.
So I've actually got a story where I actually nearly did die, which I was going to share.
Physically.
All right, fuck it. Yeah, go on.
To kick us off, because you said not actually die, and I was like, I actually have a couple of those. I got caught behind a shipping container when it was on chains once, and that almost suffocated me.
How did you get suffocated? Sorry, what did you do?
I was walking between a shipping container that we're putting in on site and a wall, and the guy managing the machine couldn't see that I'd walked behind to make sure it was clearing, and he swung the arm out. I was between the shipping container and the wall, and I couldn't breathe. And I was just there like, this is it. See you later, champs. And then he swung it out to see where I was, and there I was, a pile of shit on the floor.
Oh, you like
that's
got
not
knocked
actually-
out, or like?
That's not actually the only story. The other story I was going to say is it was when I was back on the tools. I was building a house, and we had got it wind and watertight. And I'd built a temporary staircase up the centre of the house, and built a handrail around it. And because I built it, I knew how strong it was. And like a couple of weeks later, I leant up against the handrail to look back at something with fitting some sort of electric or something over the ceiling joists in the loft. And I walked back to have a look up, and what had happened is someone had taken the handrail off to get some materials up the staircase, but not fitted it back on. They literally just hit it. So the screws, which you'd struggle to get a screw out by weight, were just touching the timber to hold it on, to hold its own weight from a little bit of timber, but obviously not a human's weight. And anyway, walked back, leant on it, fell down the staircase and grabbed the side rail. It was basically hanging from one side. But anyway, that would have probably been game over.
Fucking hell, mate.
Straight down onto concrete. And that was back in the day where there's no PPE. I wasn't wearing any of that kit. But the hat would have probably fallen off anyway.
Back in the day in 2015, knowing you.
Oh,
I mean, have you guys all had close calls on a site, like at some point? Like, have you just
I have had a couple. One of them, I was actually doing a marketing video and went into to a flat, and they were it was one of those out of sequencing jobs where we had scaffolding up, the scaffolding came down, and the the balconies were being installed post the scaffold strip. But because of that, something happened anyway where the doors weren't on. There was something going on. I can't remember. Anyway, I was in the flat, and as I was looking at my phone as I was recording, and as I was walking around, I was looking at my phone, so I wasn't seeing anything. And I was walking back to get the full room in, but I was walking back to where the double doors would normally be, and there was no double doors there, no balcony up, and no scaffolding up, and so but there was a little lip on the steps, so my heel hit the back of the. I was still looking at my phone, and then I went basically similar to Jack to lean back to get more of the thing in, and as I went back, my back went past the point where my body kind of knew where the glass should have been, if that makes sense. And I started going through, and then straight away, this kind
fucking hell, mate.
But that was on the second floor, so that would have been a bit of a drop. So
A painful one.
Killed by vlog, mate. That would have been not so good.
That
What
was
about you, Stu? You've been on a lot of building sites.
A lot of building sites. I don't really want to talk about it really because I don't want to jinx myself, but I've never, touch wood, had an issue on a building site. A load of my guys have gone through ceilings all the time.
Yeah.
I know how old the ceilings are. They've slipped, they've tripped, they've come through someone's living room, someone's bedroom. I've had sales guys that have fallen through lofts before, but yeah, touch wood. Just got an amazing
that's what he
vision,
calls his business, Sky Lofts.
I've got hundreds. When I used to work on site, we had a phrase that every day you hurt yourself. Every day.
Yeah, emotionally, mentally, 100%. Oh god.
Yeah. Well, you'll hit your fucking hand.
Emotionally.
Anyway, we talk about not dying physically, but maybe mentally,
maybe more constructive
emotionally.
issues.
Yeah. I mean, my sort of nearest point, I think, as you're setting out and growing, I think that growing one of these types of companies is actually easier when you're very green and new and low overheads, and actually more difficult in this sort of small to medium enterprise size where you're constantly trying to break the barrier and grow. So small is considered like 0 to 5 million turnover, and then 5 to 50 is medium. I think that growth always brings inherent problems from cash flow, and I'm sure we'll touch on this quite a lot in this topic. But most businesses, will fail, not because they're not making profit, or not even because of risk, is because of cash flow, and that's actually the largest reason development companies do fail. And there's no real poignant time in my memory where I was like, "Oh, that was fucking close." Specifically for all of XP surveys and central suites, our social portfolio has been an absolute nightmare for years, and it's kind of like you just get used to it. And you know, it's like it's like the new normal, that it's just stressful every day. You build up an immunity, and I think that immunity in sort of building up that barrier for stress and pain is really important, and it's why you know, a steady sailor was never made in steady seas. It's you got to be fighting problems to improve your mental endurance and resilience. And I suppose the most poignant points for us is we run a group of companies. There's 4 companies, and then there's Aura outside of that. The benefit to that is when one business is going through a little bit of a cash flow problem, or a big cash flow problem, is you can lean on the other businesses. But when you have all of those businesses going through a bit of a pinch point, or more than one of those businesses going through a pinch point, it does start to get a little bit hairy, and you start to think to yourself, I'm very resourceful, but I'm running out of resources. And that thought process really puts, you know, your feet to the fire. And actually, I'm probably a little bit weird and sadistic. I quite like pressure. I actually get more satisfaction resolving something if the pressure's higher. And you know, even though, like, the way that humans naturally forget things, and you almost become naive to a situation again and get into it again and go, why didn't I learn from last time? It's because it was painful, you overcome it, you enjoyed overcoming it, and then you're up for doing it again. Whereas a lot of people that are maybe not up for running business, we go, I'll never do that again. I'll never go not knowing where the next paycheck's coming from. Whereas I thrive in that environment. I love pressure. And I love it when I'm invited to a call where I know there's going to be, you know, confrontation and friction, because I feel that really challenges me, and I look for challenge. But we've had a few times where XP, we might have had delays or unforeseen costs, and now we're delivering quite large projects. Those unforeseen costs aren't $5,000 anymore; they're 10 grand. XP surveys, we sometimes have quieter months where we have maybe more time-consuming projects, so the cash flow coming in is a little bit weaker. But it's again not. We were actually with our non-exec the other day, and he said, "Well, why isn't XP surveys on your group cash flow accounts?" And we went, "Well, it's only ever like needing a little bit of money for a month for it to go in. You just become like immune to, you know, that's like $3,000, which is a lot of money, but not on our cash flow perspective. That's nothing, and it's easy to find that as and when we need it." And then Central Suites has only had cash flow problems because we keep throwing it back into property. So we're victims of our own success in that capacity. So yeah, I suppose long story short, there's probably been half a dozen times every year for the last 7 years where I felt that we've had to resource from other businesses, and it's put us under other pressures. And actually, stupidly, we've lent money out to other people, and that is one of the biggest mistakes that we've learned from, because you have no control over it. And even though you might agree an unearthly rate, and it would be really exciting to get that back, lending money is not about getting a high return on your money. It's about getting the money back. So that's put us in a few cash flow problems where we got I hate to see money in the bank account. We lent our social portfolio like 130 grand 2 years ago. The amount of times I've needed that 130 grand in the last 2 years is unreal. It's like every other week I was like, well, if we had that, we'd have that back. But you're going, well, we got a good, we're charging a good return on it, but it's not coming back anytime soon. So it doesn't matter what the return is. There's an opportunity.
I do have an answer for that, Jack.
Sorry?
I do have a fantastic savings technology that allows you to be liquid and to hedge against inflation, mate.
What is it,
better
Stu?
return.
What is
Yeah,
it?
that is exactly what it's about, mate.
So it's not a liquid solution, is it?
It's totally liquid. Within minutes, it can be back in your bank account, and you don't have to lend it out to protect yourself against capital.
Yeah, but if I
would
lent that in a couple of years ago and then pulled it out, it might have been down, depending on timing.
But in 15 years, it hasn't gone down. It's theoretically impossible for it to go down.
I'm talking about, so if we had the...
What are you talking about, guys?
Bank account 2.5 years ago and then lent it out 2 years ago, in that 6 month period.
Yeah, so if you are constantly saving in Bitcoin and you're basically now with
Bitcoin.
Strike in
Oh.
America, you actually don't even have to touch dollars anymore.
Sorry,
It goes
guys,
straight
we've
from your
moved
bank account
from
straight
my
into Bitcoin.
near-death
No, but this is
experience
the
to
problem. That
Bitcoin.
I'm seriously contemplating this, actually not touching pounds at all and having everything come into my personal and business straight into Bitcoin, constantly saving it in Bitcoin, and then when bills are required, it flips it from Bitcoin straight into
Yeah,
the currency of your
I
choice
see
and to
that
pay off
as
all your debts, mortgages, everything.
yeah. I mean, what I'm getting at is XP Property isn't a service-based business, so we don't have a grand a month that we put into Bitcoin. It's we got a lump sum, and it either sits in the bank account or goes out the door.
No, but I was talking on the fact you said I hate having money in the bank. Why do you hate having money in the bank?
Well, because I want to
It's
get
not
an
working
interest
for
in
you.
it.
Yeah, exactly, because you need to earn money on it, and that's the
Yeah,
way that debt society has been built up. Now, I hate having money in the bank as well. I'd rather be a negative £1,000 in my bank forever and have all the money I own working for me because we've all got to fight this.
yeah. I get it. I'm
That's
more referring to obviously we're going to use it at some point. So
of course, yeah, exactly. But that is exactly why I can't stand having money in the bank as well. It's always got to
Bitcoin
be out
cash
there
accounting.
working, and you risk it trying to make 10% lending it to a mate that you never can get it back. It's a pain in the ass.
Yeah, that's
true,
that's also
true.
true. I think
Yeah.
we've all been in those positions before. But yeah, I mean the point you're raising though, Jack. I mean that's something that I can feel absolutely. You know, where you've got fuck's sake, if we didn't have to plug that hole in that thing, we've had that money. But you kind of go, yeah, but we had to plug that hole in that thing, so you're kind of stuck, aren't you? It's not really a choice. It's like
Yeah,
that's the nature of
we're
doing it.
not too concerned about sharing the pains across the business. That's second nature, and our intercompany loan account sheet is fucking rife. Like you think they'd sort of eventually cancel each other out, but it
Yeah,
seems to get longer and longer and longer, especially the bigger the
yeah,
group gets. So
yeah,
we're more than happy lending it to ourselves, and that happens sometimes every hour. Where we go right, there's not enough in this account, so let's move it for a couple of weeks. That's
yeah,
a constant movement, and we've actually got someone that manages that full time. But it's the problem where all of these come and test you at the same time. It's almost like if you've got out across the 5 businesses, it's almost like if you've got 5 kids and all of them are playing up at the same time, you're fucking running around a
Well,
little bit stressed, but
I've got a prime
we always
example
get
of
through.
that.
Go on, Jay.
Yeah, I've got so two things on there. One, obviously, we all work with investors, so we're not talking down people that lend money to investors or developers, because there's definitely a place in the market. And I think more what Jack said, because Jack, you have trading businesses, you have your opportunity cost for not having those funds in are significantly high,
Yeah,
whereas if you're an investor and you're maybe working full time, or you're not really in business, you don't have your own business, or you're whatever it is, your opportunity cost for not lending out may not be as high as Jack. Sometimes the deals you look at, you can make a quick turnaround and nearly double your equity investment within the
yeah,
space of
sure,
6 months.
yeah,
Two different things there, but it's 100% place in the market for investors. So we're not talking that down at all. But the my as an example, in terms of the volatility of running these types of capital intensive businesses, we all have forecasts and they all look green. They all look red now and green in the future, probably. But the I'll give you one quick example. Sorry, I know I've just said that 7 times, but number one, we had in terms of 2 months ago, a few months ago, forecasted position for the following month, all fine. Within the space of 30 days, we had 2 sites that had issues on site, and then they pretty much stopped for a period of time. We're only talking weeks, but still, the monthly valuation was basically just got chopped into maybe a third of what was forecast for 2 sites. So so on each site there, that's like 150 hit, so 300k, right? Then we also had an investor, development finance lender, pause funding on a site of which we were on site with, generating costs, and then not being able to get a drawdown in the same period. That's 300,000 as well. So we're 600,000 adrift now within a month. And then we also had forecasted and all agreed in legals a sale of a site that got pushed just because some of these buyers are really slow, and combined it was 400,000. So within a space of 30 days, what was forecasted to have £1 million of inflow moved. So now that's a timing issue, but still very much £1 million cash flow timing issue. So whilst you get out of it, it causes an immense amount of stress and pressure. And if you've got things lined up, like a follow-on exchange or a deadline because you bought something in auction based on all that, the decisions you make, unfortunately, will come back then to haunt you. And then the problem is, in a business, you can't just, in this type of business anyway, you can't just stop spending straight away. You know, if you've got staff, it takes a period of time to let them. There's a lead time to stop spending. You can't just stop straight away. So yeah, that's the most stressful positions we have is because of that there, the volatility of cash flow swings.
Yeah.
And the only way to get out of that is by coming back to what these two guys said, keeping like £1 million in the bank to make
Well,
sure that you're always fluid in that
well,
stuff.
there is now a slightly better solution, isn't there? And this is Stu's going to fucking love this, but definitely as developers, I mean, you just need to have cash, like at least 3 months run rate. But if you can, the bigger the war chest you can have of
Define
liquid
run rate
cash,
though. Sorry, right? Define run rate, because if that includes like your build
doesn't
cost
include your
as well,
sites. No, doesn't
yeah, I was
include
going to
your
say you're
sites.
just
Yeah.
never going to do that. Yeah, yeah.
Yeah, not your sites, purely just
Your
your
overhead.
fixed, your true overhead, but including financing costs and things like that of your internal business. As long as you've got 3 months there, then you're okay. If you can have more, great. But the problem for developers historically is we don't want to hold all this cash. We want the
Deals.
opportunity of developing it. But
It takes
now
2
there's this
years to come
solution.
around. That's why.
But now there is this liquid solution where, and this is something I think going into 2025 is going to become very apparent for the wider public as the US triples down on Bitcoin. They announced recently that they are going to put it on the Treasury balance sheet, and I don't see Trump not delivering on that. And if they do, then your option as a developer is now this. You're incentivized to hold more cash as a reserve for your business in a liquid asset like Bitcoin that historically has gone up about 45% year on year. So you get great returns on it, and you've got access to the liquidity. Yes, it's volatile in the short term, but at least you can pull that cash. It's making you good cash. It complements your trading vehicle that's capital intensive. And that to me is a great hybrid. So there is something to be learnt there to help with that sort of scenario you're on about, Dorian, where you don't want to hold too much cash because you want to deploy it.
Yeah.
But here is a scenario now where you can hold that cash, make great returns on it. But then you can still pull from that to help the trading vehicle, and it almost acts as a backbone, a treasury asset that can support it. So that there is a solution there. And you could also, that could be done with stocks and shares and bond accounts and things like that as well, if you wanted more trivial returns. But I think Bitcoin's a good play to plug those kind of holes. But anyway, that's Bitcoin. I've got an issue that did nearly break us. Like we were this close to going bust. Someone got a dog.
Yeah, sorry, mate. He's just. I'll put myself on
right.
mute. The missus is leaving.
No worries, mate. It was quite loud. So I think I've spoken about this on this podcast before, but in the interest of trying to like narrow in on this in detail. So we had a big site going through literally the peak of all the fucking inflation and bullshit, 2021, 2022. So 2020, early 2022 got on site, scheduled to complete early 2023, and it kicked all the way into the summer of 2023. Now, anyone who's in the property space and just in business generally knows that period of time was an absolute ball ache, and we're still coming out.
Worst ever. Yeah,
Worst
yeah.
ever. That was just an absolutely horrific period to be in construction and to be trying to exit schemes or sell schemes. You basically get squeezed from all ends. Your costs go up and your exit gets more and more constrained because interest rates go up. So that was a very hard period. So I saw what was happening just by nature of growing up. My dad's always been quite big on, talking about what's going on in the markets and politicians and things like that. Not in crazy detail, but to a point where I've understood that these things that happen in Whitehall can actually affect real people. And we saw what was happening and went, fuck, we're not going to have the cash flow to keep going if the big sites keep getting squeezed like this. Like, we're going to need to find more money. So otherwise we go under. That was basically the situation we faced. So this one particularly big site went up by about 400 or 500 grand, not just to inflation. There was some issues that we made internally on the designs that caused, maybe 100 grand's worth of that cost, but the majority of it was just material inflation. So we went, right, well, we need more cash. So what do we need to do in our business so that we can produce more cash, so we can cash flow out of these legacy issues, but obviously do it in a healthy way where we can get to a point where we actually come out the other side survive till 2025. So we then took our HMO business that we did as joint ventures, where we don't make a lot of cash in the short term, but we build up equity for the long term. And we went, what if we sold that as a product, as a service? Now, if you're listening to this, you could do the same thing with sourcing, with I don't know, mentorship and other things. There's other ways to make cash in property, as long as you're being useful for people, that can help subsidize potential development sites you might have going on. And that's basically what we did. And we built a HMO service where investors then come to us and we charge fees, don't take on the risk with them in the asset. Therefore, we don't get the long-term benefit, but we make better capital chunks in the short term. That helped us cash flow out of our issues in a sensible way. We still had to put in more of our own funds to make sure we plugged the issue, but it allowed us to save the business and go in this new trajectory. And that's what we did. But that was, if we didn't do that, we were done. That was it. We'd have had to fire sell the sites. We'd have been crushed. So we had to make real evasive decisions. And it took us about 6 months to really get it up and working. So you're spending 6 months going, is it death? Is it not? Is it death? Is it not? Is it death? Is it not? And you're rocking at night and you're going, fucking hell, I need to get this sorted. So that's my big sort of takeaway from that, is trying to find more ways to make cash. Ultimately, as a business owner, that's your job. Bring more cash into the business.
That's your only job. It's your only job.
Yeah.
I mean, people can underestimate how important cash flow is. Like, it's all good when you're sitting on money, but when you haven't got money, or you've spent the money 3 times over, is really where the sleepless nights can come in. And in construction as well, this is the hardest time for any business. And if you listen to this and you're running a business and it's tough, it does get easier because you just become numb to it. Like in December, you're doing half month's worth of revenue. Effectively, the weather is against you. You might have just carried a big month forward in November, which means you've got to pay lots of bills in December. On the flip side of that, as you come out into January and you've got a very low December of costs, and you can obviously create a load of cash moving into January. And if you set up your business properly and you can run quite well from January onwards, then that will have to tell you if you have a good year or a bad year, just through cyclical cycles. But yeah, there's 4 main things really, I think, for the problems is overheads, cash flow, quality, and planning. They're the 3 main areas. If I was going to plug a problem, overheads, when you grow, you need to take risk. And if you take risk, you take more employees on, or you take a decision that might not be the right decision, but you don't know until you try it. And I think that's the other reason why the network we're trying to build is hopefully going to save a lot of people a lot of these problems, or certainly mitigate a load of decisions that you could go into quite naive. But you might take someone on, they might cost you 80 grand. You might run with them for 4, 5, 6 months and actually realize that they're not doing what you need them to do, or that you set the job roles out, or the KPIs to start with aren't working, and it doesn't actually gel with the rest of your business or where you want to go. And you've got to be strong enough and bold enough to cut dead wood, or cut decisions off where you admit you're wrong, admit to them you're wrong, and scale back on the cash flow. There's so many things you can do with your business where you go down a decision, you invest 10% of your revenue into a decision that's actually not the way you want to go, or the company wants to go, and you've got to just be bold and cut it off. Quality as well. I think quality and keeping a handle on quality, if you just shy away to the fact is if that will be all right, it will never be all right. It will come back to bite you in 6 months, a year, 2 years, 3 years.
And twice as much.
Yeah, absolutely. But it's not even that, it's the headspace it can take up, because if you're trying to deal with problems that were historical and they've compounded, then you're trying to grow a business, get yourself out of a cash flow problem, and pay for mistakes that you may have known of in the past. So I've kept quality at the number one thing. You've got to make sure if you do a good job. I can say that 100% of every loft we've ever built, or every development project we've ever done, I'd be happy if it was my own house. So that would be the quality I would walk away from. And that stood us in good stead. I think it's the ones and our competitors who have not put quality first are the ones that have run into big problems. And I think they're the ones that aren't around anymore, or have had to set up again in their wife's name as the new director and buy the company for £1 and all that stuff. But it's easy to see all this stuff online. And then planning. Planning is such a cost which you just can't control. It can take 6 months, it can take 18 months, it can take 2 years. And I think that if you look at bridging sites, I'm seriously contemplating next year, we're looking at 4 sites that have all got planning, because the carry costs of running these sites, unless you are sitting on a unencumbered site and you can just go, right, we own this now, let's park it for 2 years and know the upside's coming. If you're trying to bridge this stuff with planning, it can cost you, it's cost us £250,000 this year, and we've got 3 applications we're still waiting on. I was hoping that the one in Twickenham would have come through this week. The guy decided to put a 2-month extension on it, and we couldn't get on with doing the affordable housing reports or the assessments until a certain point in the process that he was happy with. but that was 3 months down the line to then start another 8-week application on top of that. It's just ridiculous. The whole thing for SME builders, planning it will destroy. I mean, that's why there is so little of us now. It's because, what is it, 2%, 4% of planning applications are SME developers, because they can't carry the 60, 70, 80 grand planning costs on a 5, 6, 7, 8 unit scheme. It just doesn't work.
It's also like one of the we actually genuinely have 7 figures across our sites currently, like, have invested in planning. Where every deal we do requires full planning. We don't in terms of the amount of deals we've done, is probably like 1-2% that have got planning. We've got planning on everything nearly, and we've got a pipeline ahead of us because we're built up and geared for it now. And obviously, the working capital cycle takes us on average 21 months on average. Some are longer than that, some are faster than that, but on average 21 months. And it also takes us on average 5,000 per unit. So, and for us, the size of company we are, we need like 1,000 units going through the pipeline any given time. So that's like up to £5 million at peak. Now, either way, if you have that 2.5 million, which is about right, that's currently roughly what we got at the minute, about 2 million-ish, invest across across all of our pipeline sites that are working through the planning system. If I had that 2 million in instead, then I'd be wearing Christmas jumpers like Stuart at the moment.
Yeah, it's investing in that pipeline, though, isn't it? Because if you don't do that, then you don't get the work in 2-3 years' time once they deliver, and that's the nature of the game, isn't it?
It does give you a competitive edge in our space having land. Like, there's a reason, because it's so hard. This is the other side, right? And this is when I create the business plan. Because it's hard, because it's a barrier to entry, because it's long, people don't really want to do it, or they do 1 or 2, and they don't really do more than that, or they pull out, or they can't scale. It's such a barrier to scale, and it is a direct barrier to the housing crisis. I genuinely believe that. The flip side is, if you can model your business in a way where you can deal with that, then you do stand yourself in a good chance to carve out a really good piece of the market for yourself. But that means capital. I did it by raising funding from like a small family office, ultra high net worth, whatever, on a more of a corporate scale, and then invested it in. That then carries with it its own downsides as well and risks. But if it ultimately, if it costs us a lot of money, a hell of a lot of money to do what we do, and I have a plan. I want the business to take it all out, basically, and I'm currently working with a joint venture at the moment. I'm looking more at joint ventures with a fund right now, and if it comes ahead, they will take over all of the planning, the pipeline investment, and it'll free up significant cash for them for the business, and that's
They'll
really
cash flow your soft costs.
Yeah. So,
Yeah,
and it's our biggest risk left in the business is this pipeline, because the problem is we've done that, and we've got, but now all the deals we're looking at, they're bigger, and we want to go into other regions, other sectors, and you just need so much money for it. So we're better off joint venturing. They fund all that soft cost. We then deliver it, and as a developer, still charge a margin for delivery, and then we share the upside post that. So. We'll see.
And I think it's worth adding as well, like because there'll be people listening to this deal, that like people who are, particularly if they're not in property as vested as we are, they might go, well, yeah, but that's your job, mate. If you want these properties, you want to make your millions, you've got to invest all this money and do this and that. And I would say I completely agree on the construction.
You've got to build it then as well.
Yeah, the construction, yes, it costs lots of money. The materials, the labor you need, the tools, the resources, obviously that costs money. It just shouldn't cost that much money on planning, for bureaucracy, for managed bureaucracy shouldn't cost that much money. And that's the big complaint, really, is that we're paying a lot for not a lot, and it's clearly overpriced, and it's very inefficient, and it shouldn't be that way. No problem spending money on things, obviously, but it shouldn't be for this long and this amount on so much bureaucracy. And I think that's the core complaint that we have as developers, just in case people are listening going, why are they complaining about investing in their sites? Well, it's not the investment part, it's what you're investing on.
I will actually say that, Ryan, on the flip side, there's a flip side to that, is I actually don't mind, and the other developers, I would say on average, we don't actually mind paying more, even if the decisions come through
It's quick,
because if you can work to an 8-week timescale, and I'm gonna be a bit drastic, double the cost. Like, from a planning point of view, not necessarily all the reports, they're already 10 grand a pop, but from a planning point of view, yeah, double the application fees, fine. We'll get it turned around in 8 weeks, because the cost of of this delay is way more than double the
Yeah,
planning application fee. Way more.
way more. Yeah.
The
Yep,
biggest problem with planning, I know we're not talking about planning, but it's the ecology side. The environmental side has gone absolutely bonkers, and we've gone so far left
Yeah.
that how can you have a site that can have 300 houses on it that's got a family of bats, and that just stops the whole planning thing for months and years, or a pond with newts can stop. I mean, I get the newts have to have a
It's the
home, and
great
I understand that we
the
can't
back.
bulldoze them through, but
Yeah,
that can hold a site up for a year.
the
It's crazy.
burglar the burglar is the problem, not the crowbar that they use. All of these little things are just way people get in and make life more difficult.
I
But
know what we
Stu, you
do.
haven't
Let's throw
actually
DNG
answered
in.
the
Let's throw another
specific
report in.
issue that you nearly killed you as a business. You said, "Oh, planning's an issue, delays are an issue." Give us a
No, sorry. So, overhead. So, when I set up, I took a very good friend of mine on from school. He went to work for Travis Perkins. Become a lovely guy. And he obviously knew all the materials and stuff, and it made sense for him to become my right hand man. He would run the skips, the sites. It'd be the go to for the guys on site when we were setting out, and it was smaller, and you need to trust people when you're in a circle. And as we grew and got bigger, we sort of carved this job up. We take someone in for finance, someone in for pre-build, someone for customer relations, and it got to a size where he was doing the bits that was left. And the bits that was left were paying suppliers or paying trades, and it got to a point where I hope he doesn't mind me saying this, it's a few years ago now, but got to a point where we were looking at our cash flow a few Christmases ago, maybe 7 Christmases ago, and he'd paid a roofer like twice for a 20 grand bill. I didn't realize. And I was like, oh shit, on top of other things, because obviously when you are running into a bit of a cash flow lull, you are looking at everything. And some of these bills, it happened on a few occasions. And I also had another good friend of mine who was in to try and help us build the systems and the infrastructure to really scale this to a national basis. At the time we were trying to go national, so we needed a lot more infrastructure, and it got to a point where cash flow was so dire I had to make some real tough choices. So Christmas, the day after Christmas, day after Boxing Day, met a good school friend of mine down the coffee shop, said the time was up, we had to part ways, and I actually bought him a house where he lives in a house and rents from me, one of the houses that
Parting
the plan
gift.
was to sort of gift it to him. No, yeah, he still rents there, and he rents. I make like £100 a month off the guy, and I also set him up with his other job, so I'm not a complete arsehole. And it was horrible to do because the guy had helped me from the start, but it was the right thing for the business. And the missus is so good; she's like ripped the band-aid off. So I went and saw him in the morning, and then went and saw the guy who was helping me with our systems in the afternoon, and just got rid of both of them. And I had to, because it was we were going to hit the wall if we didn't make these big changes, and that then shuffled everything up to go right. Let's become shrewd. Let's become frugal. Let's cut all the shit that I was shying away for 6 months.
Yeah.
It was just bleeding through, like, I don't know, 40 grand a month was just bleeding out of the business, and you could just see the trajectory going. I've got to make changes, and that was a decision, which was a tough one. But my God, I felt alleviated after, because
See, that's a challenging one right there. Sorry, right? Because this is important, right? Anyone in business will have a cash flow forecast and a financial forecast, or they should do, right? To know what's going on, and that's really challenging, because you can go through some really, really, really tough times. Like we traded through the inflation period, the high inflation period. In fact, we actually doubled down and scaled through the high inflation period. The more prudent response probably should have been to slow down, just dealt with what we had, and then pick back up when we can see the market returning. Time will tell by the end of 2025 whether my decision was the right decision, because we've actually gained quite a large market share from doing that, because everyone else took that approach, and we were the only one of the only ones really to actually double down. But either way, it caused a lot of pain. We're talking 7 figures worth of lost effective profit, like multi-millions, really. So the question with that is, when you obviously, to deliver sites, you need staff, right? You need staff. For our volume, we're building 10 live sites. We manage the construction ourselves, and we got a pipeline of 25 sites ahead of us. So we need staff. In fact, we need quite a lot of staff. So when you're working on jobs that not making money, and you've got staff, and they're very expensive, as you say, Stuart, only with a handful of staff, you can literally save like 30 grand a month effectively in costs. Problem is, when you look at your forecast, if you just look at what you're working on, that makes sense to do that. If you're looking at what's coming in 3 months and 6 months, and obviously for you still need those staff. So, but then at the that 3 months expands to 4. It's like, where do you? It's very difficult to know how
such
to
an art.
call that decision, because you can't bring staff on. If you let staff go, then those sites do start. You need to then re-recruit, which ends up being more expensive than just keeping them
holding
on.
on. Yeah.
Yeah.
It's a tough one. It's so difficult. And like the wife, like she's the most expensive one, and she doesn't even go to the office. You know, she's full-time mum. Get that? It's a tough job, but you can't fire your wife. You know what I mean? So she's now a liability. I was saying this last night at the Christmas party, but you know, and we're actually got recruiting. We're recruiting for an assistant specifically for certain tasks to free Megan up now, which we've got like 4 people we're seeing this Friday. Is it tomorrow? Yeah, tomorrow. To start the new year off on a high. So it's a constant art between how many people do you need, what the forecast looks like, and then you're dealing with market conditions. You're dealing with interest rates, everything outside of your control that actually deters how your business is going to look. I mean, fucking what the Labour have done with national insurance. All this is going to have such a knock-on effect to the borrowing cycle, to people's confidence levels, to spending levels, to the progression in their jobs. Like all this stuff has a huge knock-on effect. That's why I'm so into the macro stuff, because it's 6 to a year out, and I'm making decisions now, thinking how we're going to look towards the end of next year, and the sites we're taking on, the planning risk, the cost, the carry cost. There's such a balance. You have to. It just takes time to really sort of perfect that.
Do you all think though that as business owners, entrepreneurs, that going through hard times clearly, as we've all changed our perception and attitude towards cost management, towards cost control, towards revenue streams, etc., like that. If you've scaled the business, if you could start all from scratch, here's my question for you: would you choose, without knowing, to scale, grow your business in a hard environment or a good environment first? Because nearly every industry is cyclical, so we'll go through good times and bad times. So assuming that so you either start in a good time first, then go into bad time, or start in bad time to go into a good time. What would you choose if you could?
Bad time.
100%. Yeah.
What's
I
that?
set my first business up in 2008 in the middle of the recession. Second recession hit, I thought that's a great time to leave my job and set up a construction business, because you don't know any other different. And then for the next 4 years, that whole cycle, you're grafting for business. Your overheads are lower. You can afford to do it a little bit cheaper than the next guy. People who are spending, and they're spending with you. And then you can build your basis and your trust up. And then you're busy, so then you attract good trades because the other trades aren't as busy. And that's how we started.
Yeah.
So yeah, 100% in the bad times.
I don't think any of us have actually had a a good
time.
time in property. If I'm honest, I think it's been pretty shit and steady for 7 years. I think we're if you're surviving now, you're doing all right. But yeah, 100% bad time. We've been through COVID. We've obviously been through ridiculous cost inflation as a result of COVID and knock-on effect. We've gone through Brexit, government change, prime minister changes. Obviously now Trump coming into power, which I think is going to actually have a bit of impact on the world. But yeah, I wouldn't change it. I think that, like I said, I think you become more skilled very quickly and you learn a lot quicker because the knife edge is so much finer, and you just become a lot more acute to be. Most developers will make money in a rising market, and you can fuck up big time and still make money in a rising market. But then when it gets bad and you haven't had that training, you quickly come unstuck. And I'd rather be skilled before scale than skilled after scale, because it's just a recipe for disaster.
Yeah, no, I'd agree with. If I was to play devil's advocate, I'd say in an ideal world, I'd start in a good market, make some good cash, and prepare for a bad market that's inevitable. But obviously, if you've never been through a bad market, you don't exactly know what you're preparing for. So ultimately, starting in the way we've all scaled through literally the shittest time in history for property development. I know people say interest rates were higher in the 80s and all this shit, but debt levels were nowhere near where they are. So the cost of money, that percentage point difference between now and the 80s is just not comparable. We have been through the worst time to be in property development.
Just look at how hard we've got to work to earn the wealth of our previous generation, who didn't work anywhere near as difficult, and they made 4 times as much cash. Yeah, it's the underlying
What about the AI boom? Do you reckon there's going to be a lot of companies setting up?
The second I can take an AI renderer on and a plasterer and a bricklayer, you're going to invest everything you can in a robotic team.
Next year, apparently 1 million Tesla bots are going to be up for sale. I think they're going to be around £40,000, something like that. I mean, I'm not going to lie.
Get one on the ground up.
innit? Would be sick. But yeah, that's there's actually a problem you've raised before, Stu, which touches on a slightly different nature of issue for a developer. I remember you said in Skylofts at one point you had, and you said this on the podcast, so forgive me for speaking freely about it. But you said you had building control across all your sites, and the
Mm.
issue was concentration of resource or something so critical, and every
I
developer
I
at
had one
some
last
point.
week. I had one
Go on.
last week. So we had over 50, I think it was like 57, where the building control went bust and we had live
Yeah,
sites open. That story,
yeah.
yeah? Yeah, I had one last week. So the guy was moving, lovely guy. Um, Turns out, well, the building control went bust. So we had to then do a regularization to the local council. I then have to find time in my diary to go and meet him over there, see the customer. The customer's obviously wanting to move. It's slipped. He had the same building inspector do an extension and the loft, and he's gone bust on both. So he's got Anglian on the ground floor who didn't get it signed off because they went bust, and we had the loft. Um, yeah, so it's just an absolute pain in the ass. So we've had to go
Yeah.
in there. We've had to go under regularization. So we've had fire doors upstairs. We had original doors downstairs with smokes, and then no heat detector in the kitchen, which has been missed for some reason. So now we're paying an electrician to go in there, not do a Part P, but do some other fucking report, which also means he needs to run a new cable through a brand new finished property, get that sorted. Fortunately, I was on holiday in Dubai, so I don't know what the problem was, but effectively 450 quid later, it's fixed, sorted. We get it when it's signed off, and he can sell his house. But that's another 450 quid and another, I don't know,
Yeah.
2/3 of a day of Megan's time trying to sort out something that was a problem that happened 5-6 years ago.
Yeah.
You know,
And but
so
that
you
that
just
issue that you had, the way the solution, and there's a guy online called James Sinclair. I know I recently shat on him on a video just about property, but he gives some really good nuggets on business. And one of the things that's worth remembering is a concentration of your revenue or of your resources being in one client or one resource. And your
Mm,
scenario with building control was that you had all these sites scaling really nicely. Your businesses, you were diversified with trades, diversified with clients, but centralized with building
yeah,
control. So if
yeah,
that kink in the armor goes down and you're not diversified, then suddenly everything gets hit. Whereas if you
mm,
diversified building control, same with a contractor or an architect, there are lower risk elements, obviously, where an architect, you can probably be all right with, having a bit more centralized. You've got to be careful, if they're principal designer on a lot of schemes, then that could be an issue. But building control, contractors, clients, you want to be diversified and not have any more than 10% allocation towards those
yeah.
people.
But this was ADIS, right? These are like the third biggest building control inspecting company in the country. You know, it wasn't like we were using some
Yeah,
sort of
yeah.
like cowboy. And the reason we use those over the local councils is because we work in about 40 different boroughs, which all look at the interpretation of a 900-page building control document slightly
Yeah,
differently.
yeah,
And if you're
it
trying to
makes sense.
interpret every single local council and the way they want you to do stuff, and we've got our own installation details and our own ways that we think make our conversion projects a lot better, 15-20% more efficient than building control requirements. But we've got our details, and we don't want to have to down tools and explain that detail to what could be 300-400 different building control inspectors. We use an AI, a centralized government, a company who are there in the building industry to give a level of service, which means we call them and they fucking turn up. We're not waiting 2 weeks on a job that should take 5 weeks, and we haven't got the time for it to take 10 weeks. But by using them, it meant that we could get everything pre-agreed, do everything on initial notice, and then crack on, and they would trust us to do 80% and trust us that we do the last 20% the way we've done the first 80%. So it worked well for years. But the problem was we had it under one building control inspector. We should have had it over 2 or 3. And we also weren't checking if their insurances were going to expire within 6 months. Because if they've overexposed or made some problems in that 12 months leading up to their insurance, and their insurance premium triples because of the mistakes they've made through their team, they're going pop. And it
Yeah.
happened recently on another firm. I can't remember another developer we know who they went pop on them, and it can be deadly because if you're coming up to completion and you've then got to expose all those stills, open up fireboxing, show them everything you need to do, all your fire collars, it can cost you pretty much 50% of your profit on it on some of these big development sites. So
And
Yeah.
I would say the biggest thing there as well, just because you're always going to have that risk as well, and just try to segregate it. But I understand, and actually we do what Stuart's done right now across all of our sites. They're with the same building control because we operate in most authorities across Wales, and it is just so much easier when you're doing the same thing. We're always looking for standardization. There's always going to be a way for you to save time and money. The one caveat to that is is in terms of your own internal processes as well. If you operate to like NHBC standards and guidance, and which is kind of like the gold standard, then and you take in photo evidence. And so I guess what I'm trying to say, if you're working with a building control authority or any kind of professional really, and they're giving you an easy time, and you feel like it's going that short term, I wouldn't say cutting corners, but that short term, relax of following proper guidance and doing the checks and doing the photos and doing the reports. If anything happens to them, you'll be in for a really hard time. If you followed everything to guidance and you've got everything documented, and it's you can still have some anal people post that, but if you've really followed everything as you should anyway, then it could. Not to say it's not going to be disruptive, but it will help. Like those issues, you can come back from. The other version of concentration, which you can't come back from if you're not prepared, is financing. I literally read a post on LinkedIn this morning before this, where somebody was an owner of a company. They put a post out, and they did helmets. They sold helmets basically. And like obviously specialized helmets for activities, not just random helmets, but still they had a niche in the market, and they raised VC money when he was 26 years old. Didn't have just took the money, didn't really look at the clauses, and was scaling. And this is what happens when you raise money. If you're doing it from a corporate point of view, if you go out with a business plan and you find an investor and they believe in the business plan and they give you the money, they'll encourage you to grow and invest and use the money. Basically, that's their driver. That's what they like from first experience as well. You go and do that, but and you scale the business and you invest the money and the money starts going. Then you typically either the business plan's worked and the business turns around, but more than likely it gets extended because of some of the issues we've already said, and you don't know what you don't know, and you end up needing more money. And at that point, this is what this happened. The guy, he sold to the VC invested, they put the money in, they used all the money, business was growing, needed more capital, or an exit basically, because some of these businesses get to a certain level, sell to a large competitor. Offer came on the table, founder was happy with it, VC wasn't happy with it, they started getting greedy, turned down the offer. They also, though, didn't put in the extra money needed for the business to carry on scaling. Straight away then, bam, cash flow hit. Problems then in the marketplace, because when you do the due diligence, if your bank balance is low and no other funding's there, straight away red flags to funders. A lot of these like lessons are coming out here because I've gone through this as well. When you go to raise financing when you've got high cash in the bank and you don't really need it, you'll get offers. If you go when you've used all the funds, even if you've done it for the business plan, you're really going to struggle to get offers, or they're going to be bad. Anyway, back to the story. The guy couldn't. The fund didn't do it. The offers started going down, and then ultimately, no one would buy it, no one would fund it, and then it went bust. In a nutshell, in the property development, if you found an investor who's funding all your deals, that's great. But the biggest lesson is just keep a pipeline. You need a pipeline of other investors, because if for whatever reason they just say, I can't fund that deal anymore, or don't want to fund that deal anymore, or they stop funding you partway through and you've got no other leads, you are in big trouble. You can't really come back from that. Does that make sense?
Yeah.
I think one we haven't touched on, but it happened to a friend of mine, is actually like cyber issues in the business. Basically, someone got into their, I think it was some form of like CRM database, like locked it all, and then held a ransom to get all the information. And you do worry, because if you're posting that you're delivering 40 million in development, it doesn't mean that you could have even 10% of that liquid to pay down a ransom. So
1%.
so yeah, it's definitely a dangerous place to be operating, and we've been putting all of our stuff on password management and cleaning all of our stuff up, because that is a concern that you get basically cyber attacked and it's a ransom to
We
get
store
out of
our
it.
we store our data in 3 locations. It's a bit of a pain in the
What's
ass, but
the
it is the only
password?
way. Yeah, no comment. But yeah, no,
No
it is a pain in
comment.
the ass.
1,
But can you
2, 3.
imagine losing your business and all your data? Oh my god, all
I
your
know. I honestly
plans.
couldn't think of anything worse.
It gives me the
Yeah,
chills. So yeah,
that
it's just
scares me
worth
more
it.
than cash flow problems. and market problems, because you
But
can pivot.
there are IT companies that come in and help, right? They can come in and look at what you're using and find
Yeah,
ways to
yeah,
like tighten up
yeah.
everything.
But it's one of those things what's the phrase? Critical but not urgent. 'Cause it's one of those
Yeah,
jobs that's always getting
yeah.
pushed. Yeah,
Should be on
we'll
the
do that.
forefront.
We'll do that. We've got a little
It's
while yet.
insurance, isn't it? It's insurance, basically, like controlling
And it's
those
like
things.
it's 10 grand again. Everything's 10 grand nowadays.
Yeah,
Yeah.
inflation.
£2,000 a report and 10 grand for any
Yeah.
any
Yeah.
Yeah,
support.
apart from the ground up community, that's not 10 grand.
That's
Oh,
100
yeah,
pound a month.
Hey,
top in the ocean.
So what about staff then, guys? Because you got to. I know you touched on it, Stu, but definitely a sense of frugality really starts to come in once you start employing people, because you realize, fuck, if I don't have that money at the end of the month, I can't pay that person, and that person's got a mortgage, that person's got a kid and families, that person's critical function in the business. The second you start having staff and growing that staff, there's a lot of learning lessons I feel everyone goes through quite quickly. Like you only need like 2 or 3 staff members to start feeling that pressure and going, right, I actually need to be sensible here. I need to keep these. They have to be paid each month, compared to other things and invoices where you could probably kick it down the road, come up with a negotiate an agreement on payment terms or whatever. You can't do that with staff because they need it to
Yeah. I
to
mean,
No.
live.
we
It
always have
starts
a
with
rule.
yourself.
We
Go on,
always have
Jack.
a rule in our business. Two formats is mortgages and staff get paid first, and then it's cash flow and prioritise management beyond that. So that where before we even run any form of cash flow, staff and mortgages are paid. And sometimes you have to get to the point where you go, right, well, what else can we do below that? Can we negotiate a little bit more time? Can we push buying back those kitchens? Can we do whatever we need to do?
it's called in accountancy. This is called working capital efficiency.
Yes.
There you go.
And
And
in property
would you?
development, it's not that efficient.
No, it's called getting
Mm.
butchered. Absolutely
Mm.
butchered. But what
Stu, what was
about?
you going to say? Sorry, you was going to say something, Stu. Weren't you?
Well, I was going to say, yeah, it all starts with yourself. I think that you need to be totally frugal and you need to spend last. So my whole life is built off of no money. It's built off of 50 grand if we've had a year and we can pay dividends and the minimum salary of whatever it is, 12 and a half grand. The wife gets the same because we're trying to be as tax efficient as possible. Then it's the staff and salaries, which is the biggest lump on your monthly cash flow. That really is the highest number where we know we need to earn 30, 40, 50, 60 grand a year every month, just to cover the overheads. We need new carpet in our office. We're moving to our new office, so we've delayed it for like 18 months. I've dragged it out, with older desks and stuff. But really coming into Q1 next year is our new start where we'll just restructure. I mean, I'll go and take a 30 grand, 40 grand, 50 grand lump out through a business loan and just get everything set up where we can structure everything to sort of catapult us to the next level, which, we're doing like £6 million a year now as turnover through the businesses, which is a good size. But to get to, like Jack said, 5 to 50 million, for us to put to get to 16, 20 million a year, which is where we really want to get to and what we're growing for. We need to save money and we need to be as frugal as we can and do it with as much staff. So what I was saying about Charlotte on maternity leave is her and Megan were doing 2 separate parts of the job, and it was temporarily for 9 months, almost 18 months later. Megan's been trying to work 2 jobs, but she's been so much more efficient and we've cut out so many more systems that we didn't need. Actually, we only need to bring one assistant in to sort of support her, to give her a little bit more time back. Which again, I said the wife's a liability because it is a cost that we're still paying for. But it actually shows that we don't need 4 people to do 2 people's jobs because we've cut out a load of shit that doesn't need to be done.
Yeah.
And that's the thing. When you grow in a business, you want to put all these systems and things in place that you think is going to make it work better, only for you to cut out 70, 80, 90% of those systems and to put 10% more back in. I saw a video on Elon Musk the other day and he was saying, if you're not adding 10%, you're not adding 10% new systems in, you're not cutting enough away. So that's sort of something to think on. But yeah, cash flow, staff, that is your number one cost, really. Making sure that
There's a good
everyone's
exercise you can
livelihood's
do.
covered.
And for everyone listening, there's a good exercise you can do if you want to learn the basic principles of this. And you've not started a business yet, you've not done a business plan, you might have no financial literacy whatsoever. What you can do is start running a personal cash book and just start recording your transactions monthly, what Starbucks payments, rental payments, all that kind of shit. Just start having a look at that and it will give you a holistic idea on, okay, that's how much I cost myself each month. Where can I save money? And then that gives you a good kind of foundation for then going into working for yourself or building a business. And you start to realize, okay, if I manage these these credits and debts like well, then I can afford to employ people if I've got that discipline. But if you've never run a cash book or you've never even looked at a cash book, I just don't know how you can have that financial sensibility.
I've
So-
actually got I've got a template for this. So head over to Ground Up
Ground Up
Network and download it there.
Round up,
Absolutely.
So in terms of the staff, right? There's two things I've got to say on this wonderful topic. In our type of industry, and when I say that, so we actually obviously we do the construction as well. It's a big thing if you're a developer, you can be really lean in terms of staff if you don't do the construction versus
Yep.
but if you do the construction, you actually need a lot of staff if you get bigger as well. Like it really is for us. 80% of our staff literally because of we do the construction. It is just that, and we also do the groundworks and we also do the M&E now. So there's a lot of staff. So there's two things. One is when you're first starting out, if people are watching this, and this is a question I'm going to pose to all of you, what would be your first hire, and at what point? The most common question I get from people starting out is they're doing when you start out, you're doing everything yourself. If there's a business partner, you both are sharing it. But if it's just you, you're doing everything yourself. And then at one point, you got as a developer, you still may not have any cash flow. Is who do you bring in first, and how do you cash flow them? That's the thing, because they say there's that saying, good staff will pay for themselves, but what they forget to say is ... when. It could literally, might take them over a year, 18 months to start paying for themselves. So what are you going to do for cash flow, which is a daily thing? The second thing, so that was the first question. First staff member, why and how would you cash flow them? Second thing is if you're scaling, as Stuart said as well, and we're all scaling here, you get to a point where once you surpass X million or whatever, and you're working with clients, you need to the type of staff you have now are different. They're more like what's it called? Management level, executive level. Their salaries are now in really, really high, but your clients are expecting it, and then you also need staff underneath them to support them. So you go through this what's sometimes called in business like this death valley to get from 5 million to 15 million. Your profit drops because you bolster in staff to get you to that level. But there will always be a period of time where you're forward investing in that, and the question comes back down to how would you guys do that as well, or what principles around that? So two questions. Start with the first one. S'il vous plaît.
S'il vous
Well,
plaît.
for mine quickly, I would say the first staff member I would take on. I remember when I first set up a business, the minimum wage was like $9,000 a year. It's now 25 from April. It's 25 grand a year.
Yeah.
Now, what's that? 2.5 times? I don't
Inflation.
think lofts weren't 25 grand that are now 65 grand. Lofts
Yeah.
have now gone from 65 grand to 70 grand. They've not gone from 65 grand to 130 grand. So everyone is having to work harder for less, which you have to come to terms with that. But in terms of my first hire would be someone who's going to free me up for 90% of the work I'm doing. Anything that's like that's a technical role in terms of ordering skips, ordering materials, someone you can train and burden with everything you are to give yourself the freedom and mindset to then grow the business and work on areas of pockets of the business you need to focus on. That would be your first hire. Anyone that's going to free you up with as many of the jobs the day to day, and then go from there. And
I'd second that. Like when you look at your day-to-day tasks, so if you're the only one in the business, you'll have high-value tasks and you'll have low-value tasks. The high-value task is capital raising, finding deals, partnership structures, recording podcasts, building the brand, and then low-value tasks are booking things in, doing all the admin, booking a restaurant because you've got a meeting or whatever it may be. So an executive assistant or an office manager is the first hire we do in every business, and we have one in every business. And that would be the first hire that I'd bring on. I think that talking on the second point before Ryan dives in about Death Valley, I feel that we are the bigger team currently in a loss-making position month by month, but the pipeline that we have is the end of that Death Valley, and it sort of replenishes the loss-making position we've been in monthly. So we've probably been in Death Valley for, I'd say, 18 months. And it's painful, but you just got to look at the destination and make sure that you have, we wouldn't be able to deliver what we're delivering today without that team. And a lot of them are very, very good and also costly. So completely agree with that, Dorian. But it's one thing I would say to listeners about being in Death Valley. It's okay if you consciously know you're there and know where you're going. I've seen quite a lot of businesses that scale a team from an ego perspective, and they don't actually have the destination to pull them out of Death Valley into the scale point where they needed to be hitting. But yeah,
That's
complete
important.
valid point.
Yeah,
Yeah.
I don't know if I know we've clarified it on a podcast before, but Jack, do you just want to explain exactly what Death Valley means in this context?
Yeah, so as Dorian mentioned, you to be where you want to be, you often have to have the labor where you're not currently bringing in that revenue or even that profit to pay for that workforce to scale. And it's a common factor. You only really make good money when you stop scaling. It's very difficult to keep making cash profits month by month, especially in development, while you're scaling a business. That's very possible in a very frictionless environment like such as tech. You know, if you're selling 1,000 units to 1 unit, it costs you the same. It's still difficult because you've got to have the team around that to support those sales. But in a development company, for an example, Ben and I were probably doing 5 projects, just us two, very little overheads and making more profit than today when we're delivering 40 million in delivery. But that hasn't transpired and come through the wash yet. And we've only got a team of 9, so we are quite lean for our delivery because we outsource the construction on a fixed price contract consciously because that's how we want to grow and scale a business. But today, every month, we're in a loss-making position. Our actual net burn rate is 18k a month in XP Property. So that's our total revenue against our total costs until we crystallize some form of value from developments. So that's blending out our total income across project management, acquisition fees. We're negative 18k every month. And until you hit the point where you have a big sale, you can then obviously offset the 18k that you've been forking out for months into that particular sale. And you might be a small site and that might be 6 months burn rate. And you've granted, yep, cool, got rid of that. And it comes from saving capital, borrowing capital in the right places, obviously charging fees to limit that as much as you can. But what Dorian's referring to is where you're building a team for the future. So once we've finished this existing pipeline thread, we will be in a cash flow positive for 1 month, and then it will be cash flow negative again. But we will have a large war chest that will fund everything that we've built today. You know, our current pipeline will probably pay for the 7 years of overheads that we've had in the business on exit of all of them. But then we're obviously on to the next stage and growing more.
Yeah,
Yeah,
Just to
that's
simplify
true.
that quickly. So if you imagine a U on a graph, Y is the axis on the side is your revenue or profit, and then your X axis on the bottom is your staff. Imagine the U when you set a business up, you've got all this extra cash, you're doing all the work, you're most profitable you're going to be. As you go and take more staff on, moving across the bottom of the axis, you take more staff on, your cash flow. The real key of the art, I think, in business is to keep the bottom, the base of that U, above the line, as close to the line as possible. You can go through years making 1-2% profit margins. It's when you make consistent compounded 3, 4, 8, 10, 15% losses, is that over time that is going to become a bit of a problem. However, you keep going, you take more staff on, you build more systems, and then the other side of the U comes back up and you start making more profit without doing the job because you've got staff doing it. And that's the Death Valley, I think, in my eyes. It's just cleanest way to think about it.
Yeah, when you look at that,
Keep going, never give up.
is in business books. Yeah, it's hockey stick. It's hockey
Yeah.
sticks. It depends on where, because as Jack said, it's like unless you when you choose to stabilize and you become in what's called your own self-sustainable growth rate, then you won't experience that. So every different business, every industry will have its own type of self-sustainable growth rate where you're growing at a certain level that your own means, your own working capital cash flow, your own retained earnings can support. But then with our type of business, for example, we wanted to, rightly or wrongly, go from 0 to 350 handovers a year within a space of 4 or 5 years. You just cannot do that at a self-sustainable growth rate. You have to forward invest part of the bigger picture business plan. And then once we get to that level, we will then sustain at that level, and everything very quickly turns back around, and then blah, blah, blah. So as I think there's no right or wrong until you prove whether it's been right or wrong. But the biggest thing you should be, as Jack said quite rightly, is conscious of it. Everyone has a plan. It might not necessarily work, but if you're conscious of what you're doing, you can make the correct moves to really maximize your chances of getting there. And like with tech companies, as you said, if they choose to stop growing, they could very quickly go cash positive. But they end up in negative and Death Valley because of R&D investment. Normally,
Yeah.
they end up bolstering their R&D team because of that next patch, that next software, that next bolt on, and then their cash flow says they can get this amount of customers, and it's just a cycle, just repeats.
It's an interesting, as a thing we've spoken about before on this podcast about first mover. Now there is such a thing as first mover advantage, and then there's first mover disadvantage. The disadvantage generally comes with that person, like take OpenAI, the money they've had to put into R&Ding in their lab, getting this tech off the ground, and then you get the competitors who can now come in. They can understand what those costs are because someone's already proven it, and then they can take that and kind of move forwards with a known quantity of what those costs are because someone spent on the R&D. If that makes sense. But I just want to answer your question, Dorian, because I'll answer it slightly differently to the boys in terms of the first staff member and what they would sort of do. Yes, I agree. There's the admin side of things, but if I just broke it down to sales, ops, or raising money, finding sites in properties case, then I would prefer just the nature of who I am and what works for me is a partnership at the start. That's what I would want. I was fortunate that my dad was that partner. But if you've got someone and they're an ideal partner for it, and one of you focuses on the sales aspect, the raising the finance in this case, and one of you focuses on the ops, and then you both carry the burden of your administrative duties below those things, and then you get it to a point where you can at least get the first few sites moving, and you've not got the overhead of staff because you're both in partnership. And then you get to a point where you go, right, now we need a staff member to carry out those duties and move forwards. That's kind of what we did, but Robbie came in and fulfilled that duty, and again, partnership. So a unique case where family members helped, but that's where family can be great. If they can work with you, they can swallow some of those. They can accept that next month's going to be a bit tight. Do you know what I mean? So partnerships can be a great way to start something, but you're accepting that you're giving away equity in a business that one day when it's very big will be very, very expensive. So if you can afford the staff, better at the start, but if you can't, partnership works as well.
Just another thing on partnerships. Oh, go on, Jack.
No,
I was just going to say, just a quick thing on partnerships. My first business was a partnership with two brothers. So it was like 33 and a third. And I think thinking back when I was younger, wanting to do it, I really wanted to run my business, but it's having the confidence to do it on your own. And then I was in that business for 5 years, sold my shares to set up Sky Loss, and then 100% done it on my own, which was a different mindset. But I had the belief I could build this thing on my own without having to rely on partnerships.
You had experience there, didn't you? By that
never
point,
would have started. Yeah, I never would have started on my own going into it because the risks were too great to do it just on your own. So having a partnership is great, and a partnership is a means to an end as well. It will last for as long as the relationship lasts. But go into it eyes wide open, and that's why it's important to have a good business plan, I suppose, and a good shareholders agreement.
Yeah, I would caveat partnerships with it's a bit like dating. You can't go next week I want to be in a relationship. Is a very important decision to make when who you're partnering with and when you part with. I've had 5 business partners in my life. Ben, my brother, my dad, and then 2 other partners that didn't work out. And it's not something you can rush or push or build a business around. I would suggest that that you need to kind of carve your own path and set your own goals and start delivering those. If the right person comes along and you have the same morals and work and ethics and work ethics, then crack on. But it is difficult to just, especially when you might not have any family. The beauty of working with family is the trust is already there, which is one of the biggest problems. And I actually found that I had a partner go behind my back. And as soon as you lose that trust, it can't be regained. So game over. So that's the benefit of family. The trust is already there. I've never had to ask my brother about anything he's ever paid or done. It's just, it doesn't even cross your mind. Unfortunately, I feel that way with Ben, actually. I've never had to prize anything. We have a very good partnership, but that was off the back of 2 failed partnerships prerequisitely. And both were around honesty and trust. It's not easy finding the right partner.
And the best thing about you and Ben as well is you've got both sides of you've got such good skill sets in 2 different areas that are fundamental that actually that propels you forward.
Yeah, 1 + 1 = 3 when you get the right partnership, right? Sure.
Yeah, and I've had similar experiences to Jack. So as it stands, I'm in a sole position, but I'm not. You starting out, like I said, if you find the right one, you find the right one, and it all works. But they've definitely got to be aligned with your vision. I'd recommend that by the biggest one. And just for the viewers to know, my first two hires were a bookkeeper and a coordinator. I chose to bring a bookkeeper in house because I'm from a finance background, so numbers were extremely important to me. I didn't really just want to outsource it. I wanted everything in house and to see everything as and not be a client. And then the coordinator, both of them I brought on as apprentices and I actually trained them up myself. So and molded them to exactly where I needed them to be. So it wasn't that expensive because they were on apprentice wages. And so I think each of them were on like £900 a month or £800 a month or something like that full time. And I trained them to exactly what I wanted to do, and it took so much stress off me. But I still had to cash flow £1,600 a month, basically, and there's no two ways about that. So, so when you look at in terms of doing your first development, the question is how you can you attribute that as a cost to your development? Making sure that goes past your JV investor, all that sort of stuff. But I would try to get it cash flowed in as soon as possible, and it will really take a lot of pressure off you.
Yeah.
I've got a question for you guys around partnership. I asked Daniel Priestley this one. If you had to start a business from scratch and you could only pick one partner, who would you pick?
What do you mean, like anyone in the world, or
Anyone in the world?
I'd pick my dad again, mate. I would. He's like a fucking
Big love.
workhorse. There's no one that I've never met someone who works at the rate he can work at, and he's 60 odd, and the trust is there. Good person, good ethics. I got very lucky that I could partner with my dad. Easy for me, that one.
I would. So I've got two answers that come to my. Well, firstly, I would want to pick somebody that's kind of been where I want to be, part of the business. It's going to be a lot easier with connections and door opening and stuff like that. And then the other one is just somebody who's got the financial resources that buys into the.
Yeah, so you're both starting from scratch, no resources, just your personality and your skills.
Yeah. So
otherwise, we'd all partner with someone.
So the partner is starting from scratch as well. Is that what you're saying?
Yeah. So
yeah. Otherwise, I'd pick Elon. Dad would be swapped out for Elon.
Right. So, right, okay, sorry, yeah. So if I'm starting from scratch and with a business partner and they've got no resources either, then I'm looking for somebody who's aligned with that, aligned with the vision and is really, really, really hard worker. To be honest, just as much as me. Yeah, I'm looking for someone like me.
Would they need a like at least some kind of skill set, like something that you'd be looking for, an aptitude or something?
For me, not really. No, they would have to have determination, grit, ambition, drive. There's no specific skill. Maybe that's because I class myself as, rightly or wrongly, quite a rounded individual in terms of different skills. So maybe that's slightly messing with my bias. But somebody who is aligned with the vision, works extremely hard worker, loyal, has determination and grit. That's really all I'm looking for.
Yep.
Every word you just said there, I just was going through each one of my team members. I would pick the same team in my office. I love them. I love the fact that I get the freedom to do what I want to do. And if I decide I want to put the accelerator down another 50%, they're going to come for the drive and they're going to work 50% harder, more efficient. Tell me what we need and we'll make it happen. So I wouldn't change the team I got because I love them. So
if you narrowed it down, though, Stu, you've got obviously what you and your missus have got is special as well. Like what I have with my dad, different because they're different relationships. But having that close
up in Newcastle.
Oh, all gets weird.
Ryan, when are the babies due, Ryan?
Yeah, don't go north, boys. It's a weird place.
You surround yourself with the people. You become the people you surround yourself with, right? And if you build a good team, I mean, I've 10 years ago, I wanted global domination. I wanted to become a big national company and everyone to know who I am. Your priorities change. And to be honest, I love the way that the trajectory is going. I love the sites we're involved with. We do want to scale and grow. We want to push ourselves without trying to be idiots, I think. And that's the thing is when you push yourself and you get burnt, what's it? Who's the Greek god? The guy who flew too close to the sun. Nikoros or someone he's called. Have you heard of him?
Zeus,
Basically,
let's
it's the
call him
Greek.
Zeus.
Yeah, one of them, Nikoros, I think he's called. Anyway, he flew too close to the sun, gets burnt, and crashes. And I think that you fly, you try, you keep going, and as long as you got the motivation, and and you do it because the team around you want you to do it as well. If not, I'll
Icarus.
just choose Nikoros. That's the guy. Yeah, that's and that goes in personality, drunken mistakes, everything. It's quite good to read up on him. But ultimately, you become the average of the 5 people around you. So just surround yourself with good people and just keep trying to push them to push you. Otherwise,
Well, here's a story though. Just because you've touched on Greek philosophy, I'm just going to read it out from AI because it has a different lesson within that.
Go on.
Icarus was the son of Daedalus, a master craftsman who built wings out of wax and feathers for himself and Icarus to escape from imprisonment on an island. Daedalus warned Icarus not to fly too close to the sun as the wax would melt, or too low as the feathers would get wet and weigh him down. However, Icarus ignored his father's advice and flew too high, and the sun melted the wax, and he fell into the Aegean Sea and drowned. Aegean Sea and drowned.
That's a
So
nice story.
the
Thanks for
backing
that.
of that was
There's a
not
lesson
necessarily
learned
just flying too close to the sun, was that he ignored wisdom.
Mm-hmm.
Yeah.
Amen. And should have had a jetpack. What about you, Jack? What are you saying? What's your
Yeah, UK-based businesses. I'm happy as I am. I've been in business with my brother's good because I can just, trust, and being with Ben, we challenge each other. We're both ambitious. Obviously, there's like an off-the-wall one. Like, it would be amazing to be in business with Elon, to see how someone with that sort of tenacity of mind works, and you'd learn more being a business partner with them to then replicate in your own life, because he's getting on now, Elon. But yeah, I mean, that obviously there's I could probably list 5 examples off my hands of entrepreneurs and business owners that I just love listening to and get obsessed with what they do and how they do it and how they think. So, but no, I'm similar to you guys in terms of what we've got. I'm content, and I think that we're actually we want to do more, but we're not because of time and family stuff, and it's so we've got grander plans. It's just we're not kicking them off yet. So
yeah. Lovely. Well, boys, I think that brings us to a nice round hour and a half.
Ta-da.
Done well here. Episode 36. And also, I forgot to mention at the start of the episode, which is an amateur mistake. Sorry, everyone. If you want to get access to the Crowd Up Network, then there will be a link in the description of the podcast. On YouTube, definitely. I'm not sure if you can add links on Spotify, but check the descriptions on both. And you should find a link, and that will take you to the About page where you can see a video that will explain everything in detail. And it's a 7-day free trial.
That's a gun. Ground Up Network.
Ground
Up Network, baby. Gun. So yeah, Ground Up Network is live. You'd have seen it on our socials by now. And we'll see you in there and hopefully create a really nice engaged space for 2025. And these episodes get released every Thursday, 5:30 a.m. on Spotify and YouTube. That's
guys, quickly before we go, 19th of December, 9:15. What are the Bank of England going to do? Going to hold? Going to lower? Going to raise?
I think they're going to hold. Yeah. Well, yeah, let's just maybe a quick one on inflation, guys, and what you think there, just quick.
Well, Fed lowered, didn't they? Quarter base. I think I'm hoping we're gonna have 1% drop as a Christmas gift, but we'll see.
1%.
That's my guess. Oh no, a quarter a base.
I mean, it could be something we talk about
1% drop.
If we're going to do one tomorrow, it could be something we talk about tomorrow.
Yeah, fair. Actually, yeah, we're going to record a podcast tomorrow. So the next episode, for everyone listening, we will just talk about state of our markets, because especially with the president-elect coming in January, that's going to change things in the world. So yeah, fuck it, save it for tomorrow. But yeah, big love. Thank you, everyone listening, and see you in the Ground Up Network or on socials. Lovely.
Shut up.
Ground Up sound. Ooh, yeah. Real estate deal. We lay them down. Let's get those deals.